What's up, YouTube? Welcome to another exciting episode of Tesla Today. I'm Kevin, and we were talking about call options. I knew nothing about call options. It seems so confusing and complex. In some ways, it still very much is. I am a noob. I knew nothing about call options until I watched this cat, Chris's video behind me. So hats off to Chris. 5.5 million views on his video, beginning video for call options or for options trading. And he's had much success for that in the last 7 months. So thank you, Chris, for taking the 2.5 hours of making this video. So this is what I did. I only watched the first 20 to 25 minutes of Chris's video and then figured, you know what, I just need to jump into it. So I took some money, we'll talk and break it down here in a second, and threw it into a call option with Tesla. And then the next night, I watched the rest of his 2.5 hours of his video, and I was like, uh-oh, I didn't know what the hell I was doing. Time to get out, and we'll talk about it. What is a call option? That's a great question. I didn't know really anything about it either. If you buy an options contract, it grants you the right, but not the obligation to buy or sell an underlying asset at a set price on or before a certain date. A call option gives the holder the right to buy a stock, and a put option gives the holder the right to sell a stock. All right, here is the option broken down to the lowest level where even a noob like myself can understand it. I'm going to use a Tesla example. So behind me, you see the Tesla option for you to purchase full self-driving. Right now, it's a $10,000 option that you can purchase with your brand new Tesla. Doesn't matter if that's a Model X, Model 3, Model S, Model Y, or pre-order your Cybertruck. You can order FSD, full self-driving, for the option of additional $10,000. Now, when I purchased my option and locked that back in July of last year, the cost was $8,000. So I took the option, I bought an option on my Tesla in this case, to purchase something that I believe in the future, taking a bet that Elon's going to make full self-driving happen. If for some reason Tesla goes bankrupt or does not develop full self-driving, I am completely out of the $8,000 I paid for that option because I did not guess properly into the future for my analysis. If you spent $10,000 on the full self-driving and 3 years from now, Tesla is the master in the universe, like a lot of us do believe will be the case with full self-driving, and now 3 years from now, you want to go buy a new Tesla with full self-driving, the price could be $25,000 for that option that you could have bought for $10,000. Therefore, your educated guess would have been a thumbs up. You saved yourself the difference between what it is then, $25,000 in the future, compared to what you paid now, $10,000, getting you a net gain of an additional $15,000 in equity. There's no difference between that option on full self-driving than how you're working the option on a Tesla contract. Only difference between a regular trade is that you're doing a contract in options trading. One contract controls 100 shares of a stock or an equity. In this case, we're talking Tesla, so one contract is having control of 100 shares of Tesla. If you do a call, that's bullish. That means you're basically buying the stock. If you do a P or a put, that is bearish, that you don't believe in it, you think the stock's going to go down, and that would be to sell the option or stock or control of that stock. So pretty similar in that respect. And the video that Chris does is great. I'll put a link in the comments down below for you to check out his video. So this is what I did. So 72 hours ago, after Tesla took its little bit of a dip, I thought, okay, let me give my first attempt at a call option. So me being bullish on Tesla, thinking Tesla's going to go up, I bought my first contract, one contract, which gives me the option of controlling 100 shares. In this case, a call, which means I believe the stock's going to go up in price in the future, and I had to pay a premium for that. The premium to control a single share of Tesla was $23.50. We're not going to get deep into premiums right now. Just know it cost me $23.50 to control one share of Tesla stock. But I told you one contract is 100 shares. So take $23.50 and times it by 100. That's $2,350. But wait. So here you can see on the bottom of the screen, there is a buy to open one contract of Tesla. Then you have to pick a date sometime in the future. All right, I believe Tesla's going to go up, but how soon? So in this case, I picked out 2 weeks out, or the February 12th, 2021 expiration date. That's called the expiration date. And then what strike price do you think Tesla will go up to? And I took a guess that I believe that Tesla would go up to $875 within the next 2 weeks. So there's a difference between a regular owning a stock compared to an option. With the option, you're not only going to pick a time for an expiration date of how long that you have the option of controlling that stock, but also you're going to pick a price or a strike target, a strike price that you believe that stock is going to go in, and you'll learn more about that in Chris's video. But of course, just like what happens after I buy any stock, to include Tesla, I am the buyer that makes stocks go down. So as soon as I bought that contract, that call option, Tesla took a nosedive, went all the way down to $790 a share. Now, there's two things I did in this with my Roth IRA, which is a qualified account, so I don't have to pay taxes on it. One, I immediately picked up another 35 complete whole shares of Tesla at this cheap price. And then I had a little extra money left, so I also did the exact same call option with the exact same expiration date of 12 February with the exact same strike price of $875. Yet this time, because the stock went down in price, the premium on that call option also went down to price. If you recall, the previous premium was $23.50. Well, here we are a couple hours later, and that same premium now has dropped down to $17 of a premium per share, times 100, $1,700. So altogether, I have $4,050 onto now two contracts, or controlling 200 shares of Tesla for the next 2 weeks until February 12th, with a strike price of $875. So yesterday, my profit loss on my two options contract was a positive $176. I was below or out of the money, $850 or $840 yesterday is what it closed at. So I was below the money. Well, watch Chris's video for out of the money, at the money, or in the money. If you're at your strike price or higher, you're in the money. My strike price was $875, and I was below it yesterday. I still had 10 days left in that expiration, which gave me some intrinsic value. Once again, watch Chris's full, almost 3-hour video. But so yeah, I woke up today. It's important that if you do options and you're with a lot of implied volatility, that you're awake and you're tracking it, or you set the limits to sell off, because especially with a stock like Tesla, it can have some super moves all in the exact same day, and you can really lose your tushy. But here's one thing I really like about options. You can only lose as much as you bet. Let me say that again. You can only lose as much as you bet. So if I would have lost my $4,050, Tesla didn't go up to my strike price of $875, and I chose not to exit the position prior to it closing, then I would have lost all $4,050. In this case, this is what happened. I woke up this morning, Tesla is going back on a tear again, going to the atmosphere, is up to $877 a share. I now looked at my profit and loss for my two contracts that I had on Tesla with the exact same 12 February expiration, and that strike price of $875. Yesterday, my P&L was $175. Today, my profit loss was $3,050. Since I didn't know what I was doing, I immediately sold my position after watching the rest of Chris's video. So, got lucky in this case. Tesla was on the rise. So I know somebody's going to say, dude, you still had 10 days left on it. It's going to go up again tomorrow. You could have made another $3,000 on the option. Pigs get slaughtered. Don't get greedy. Sometimes you need to lock in some profits. I still have long positions in Tesla. I just closed my very first option today, and I made a profit. Hallelujah. So in closing on this options trade, I picked a expiration date. I went 2 weeks out from where I bought the stock. I did 12 February expiration date. I picked a strike price. I believe Tesla would bounce back and go back up. So I guessed a strike price of $875. And then I woke up this morning and, hey, I got lucky 72 hours after I initiated the option call position. I became in the money, meaning the money was, Tesla was at 877. My strike price was 875. Now I'm in the money. My profit and loss margin went from $176 the day before all the way up to $3,050. The return on my investment, the ROI on my initial $4,050 netted me a 75% return on my money. So that's one thing I like about options, is that if I had to buy that money with the $4,000 that I had, I could only have bought 5 shares of Tesla if Tesla was at $800 a share or less. 800 times 5 is 4,000. And Tesla went up to $877. Let's just call it 75. 75 times 5. Two of those, 150. I would have made $450 by owning the stock if it was down that low. But by using options, I was able to get a much higher leverage on my position. So interesting. First shot at it, got lucky. I will initiate another call position next time that Tesla takes a heavy dive down for a future out date. Well, hey, I hope you learned something about call options today. Make sure you check out Chris's video. The links are in the comments below. I'll see you tomorrow for another exciting episode of Tesla Today.